You're listening to the Cash Flow Academy podcast with Andy Tanner, your source for investing made easy. Here's Andy Tanner.
Welcome to the Cash Flow Academy podcast. I'm your host, Andy Tanner. This is where investing is made simple. And wonderful guest. I was reading in the Wall Street Journal and my producers called attention to this. And so I checked out this story and I was reading it in the Wall Street Journal, and it was a review of Rupert Russell's book, Price Wars. And this is a very interesting, the review on the Wall Street Journal said it's like a giant Twitter feed. It's hard hitting, it's heavy handed, it pulls no punches. So this will be an interesting discussion on prices, particularly at this time where we're seeing volatility in prices. So the book is Price Wars, How the Commodities Markets Made Our Chaotic World, and the author who joins us now is Rupert Russell. Thank you for being on the show.
Thanks so much, Andrew, for having me.
And joining us clear from Spain, I might add. So we appreciate the time zone change on that. So let's start off with just a little bit of your background and what brought you to the point where you felt this was a worthy project.
Sure thing. So I used to be in academia. I went to Harvard and I completed a PhD in sociology, and I was particularly interested in economic sociology. I was actually living in LA at the time, and I was doing my field work in LA, and I was actually looking at the entertainment industry and how all the craziness of sort of celebrities and studios and egos end up creating the films that we go to the multiplex and go and see today. And so I always had this kind of interest in markets and how they sort of actually work in reality. But when I finished my PhD, I went to go and work in documentary filmmaking because I wanted to bring ideas from the academy into the real world. And my first film was looking at the crisis of democracy. And this is sort of before 2016. So I was looking really when the protests started in Hong Kong in 2014, Black Lives Matter just starting then as well. And these sort of waves of protest movements around the world. And I finished up that film, but I was slightly dissatisfied. Because although I'd gone around and seen people struggle for freedom in different countries and seen the contours of this new authoritarianism, I couldn't really explain it. And it just so happened one day that I was browsing through some academic journals, as you do when you've been through a PhD program and you can't quite kick the habit. And I found some very interesting research on food prices and conflict in sub-Saharan Africa. And I just thought, you know what? I've never heard of this before. I've been in social sciences. I read pretty deeply, and this was pretty new to me. And I started looking more and more into prices, and like a lot of things, once you start digging, the more you go, the more you find. What I ended up finding was that over the last 10 years, really starting with the financial crisis, but even the housing crisis before that, you could actually look at all kinds of different crises around the world, whether it's the rise of populism in Europe, whether it's the Arab Spring in the Middle East, whether it's, in fact, the war in Ukraine that started then in 2014. And you could actually trace, or rather political scientists had traced, these events to price shocks in the commodity markets. And that's when it all started. I just thought, wow, this is a fantastic story. I've never heard this before. And then I just went on from there.
It's a very interesting book. It's set up in three parts, basically about prices and then conflicts, climate. And the fourth part, moves into COVID. And it's a well-documented book. About 60% of the book is the message. And then there's about 30 to 40% of it just in notes and footnotes and references. So it's a well-researched book. And it's a great reminder, I thought, what made me think is about our primal nature. I'd like to be civilized. We'd like to be civil. You bump into someone on the street. Oh, pardon me, sir. But commodities deal with the stuff of life, the food that we eat, the food, clothing, shelter type stuff. And it reminds us of how quickly we can go primal. And I thought it was an interesting metaphor that I think I don't want to misquote you, but you said I'd found my butterfly effect in essence. I think I might paraphrase that. But,
yeah, that's right. That's right.
But it is a fascinating thing. So amazing, review of how interwoven, interconnected all of the prices are. And now we don't live in, villages that are separated by huge oceans. We're all tied together in this. And so it's an interesting time. Let's talk a little bit about market prices. One of the things that I think is interesting is you have fundamental analysts who look at a company, a stock, and they say, hey, what do they make? And are they good at making it? Do they have customers? And do they seem to be growing and innovating? Do they look like they have a good brand that will last for the future? And then you have technical analysts who really don't even care anything about the price chart. And because of that, we can have some detachment from fundamentals. In other words, prices might start trading at multiples above their earnings that are just huge. Could you speak first to how hedge funds or just Wall Street in general about the detachment from fundamentals? Do you feel there's a detachment?
Sure. So as I document in the book, I went and actually spoke to a lot of commodity traders, former bankers, and hedge fund managers. And as you say, sure, you have this split between technical analysis. It's also called trend following, or momentum trading. And what they do is they just look at prices. So if the price ticks up, that's a great signal to buy. If the price ticks down, that's a great signal to short or sell. And then you're right, you have these fundamentalist traders, and they spend a lot of time looking at satellite imagery of harvests around the world. They're tracking oil tankers as they move across the sea, and they're really trying to get into the nitty-gritty of the reality of these markets. And it's sort of, if you like, some people kind of have characterized it to me as a bit of a battle. Some people have characterized it to me, the trend followers, that is simply that the fundamentalists are too slow. So there may be some new information coming into the market. Maybe there's a drought in the Midwest. Maybe there's a country that produces a lot of a metal, could be nickel or something, and they're having some political turmoil. And the fundamentalists are a bit slow at incorporating the information. And so the trend followers kind of take advantage of this kind of human frailty, and they kind of jump on these trends. And the trend followers will say to you, most of the time we're wrong, but when we're right, we're really right. And that's when they make all of their money. In terms of how this relates to the real world, is it detached or not detached? The way in which I ended up thinking about it was quite simply an amplification effect. So in the long term, as Keynes said, we're all dead, right? In the long term, the fundamentals will win out, reality will win. But there's a short term where the markets can't quite decide. As I just said, the information hasn't quite been processed into the markets. And we're seeing that in real time right now when you're seeing the oil price jump up and down $30 a barrel. I mean, this is completely unprecedented. And the reason why this is happening is, A, there's obviously huge uncertainty. Nobody knows what these sanctions really mean. Nobody knows if Russia's going to be able to sell their oil in a week or in a month, who will buy it, at what price. Nobody really knows what's happening with gas or electricity prices. And so that's why you're seeing such massive volatility. There's genuine uncertainty there about fundamentals. But what you also have is you've got all kinds of other trading strategies, and momentum trading or technical analysis is just one. There's, of course, lots of different algorithmic strategies kind of thrown into the basket as well. And that's also creating a huge amount of volatility. It's simply amplifying the moves. And that's why, this week the London Metal Exchange had to close because nickel trading was just getting too crazy. They had to just shut it down.
It's interesting. There's algorithmic trading that computers have taken this over. High frequency trading. When you talk about fundamentals being slow, from a stock perspective, you might get a report once a quarter where you report, and high frequency traders will trade in milliseconds and microseconds, where fiber optic cables can make the difference whether you turn a corner or have a straight line to the computers. So very much a detachment. When it comes to commodities, that's a little bit more complex, because with stocks, prices go up and down, and it's very easy to deliver a stock to a buyer or a seller. It can be done in a keystroke. But when you have things like oil, natural gas, corn, wheat, precious metals, These actually have to be put on a truck or a rail or a ship, and that is a slower process. And I think one of the most interesting case studies in this, with COVID turning into a Ukraine war, that 2-year period, we have oil being there's nowhere to put it, that you're paying people to take your oil. It's going negative. Say, hey, I'm supposed to collect this. I have nowhere to put it. I'm a speculator. I didn't genuinely want to take delivery of this. So now you have an oil price of 0 and below, where people are paying you to take the oil off their hands, which is amazing. And now you have oil that's through the roof. Comment on that dynamic of the volatility of this liquid gold, this liquid that makes the world go round, going from free to 130 a barrel.
Yeah, I mean, it clearly hasn't been as crazy as this. We thought since 2008, but now it's looking since 2000 and, since the 1970s. The way in which these commodity markets relate to the real world, I don't think is that different to anything else that finance is heavily involved in. We can think of housing as being another recent and I'm sure very, very familiar example. Of course, there are real houses being built in the United States. They're being bought and sold. They're being lived in. They're being rented. And then, of course, you've then got the trade of mortgage-backed securities. You've got, credit default swaps. You've got all different kinds of derivatives and securitization around it. And the interaction between these two isn't necessarily always clear or even obvious. And that's even to the people who are trading in these, as we kind of famously discovered during the financial crisis. What I found interesting about when we think about the housing bubble and the financial crisis is that I always think it's important to remember when we talk about that example, and it relates to commodities as well. When we talk about we talk about the financial crisis and the housing bubble, we're not talking about houses suddenly disappearing, right? These houses were built, some of them were unfinished, but many, many, many houses were built in this sort of construction boom. And they were there. They were physical objects in the ground. But the way in which this physical thing has sort of been financialized, it essentially created a very much a real world global crisis. And you see a kind of parallel phenomenon happening with commodities, in the sense that when you're talking about speculating on commodities, you're really talking about, for the most part, derivatives trading on futures. Some of these, in fact, could be derivatives like index funds. I had bankers draw on whiteboards for me how synthetic these can get. And on the kind of third iterations of all these arrows all over the board, he actually himself couldn't explain the derivative product that he had helped build at a major investment bank. But what this ends up doing is that the futures market, even though it's a paper market, quite literally, it's a derivatives market, that performs the what they call the price discovery function in the marketplace for the physical world. So even though there's often some disconnect between the futures markets and the spot markets, on the whole, most people were saying to me, whichever commodity you look to, the people actually doing the buying and selling on the ground are looking to the futures prices. Now, in addition to this, a bit like in housing, all kinds of weird things can start happening. So, for example, around 10 years ago, investment banks had as many, oil tankers rented as major oil companies such as ExxonMobil. There was one bank. I can't remember off the top of my head which one it was, but there was one bank that was the main jet fuel supplier to United Airlines. You then had other things happening, like Harvard University endowment going to Brazil and buying $1 billion worth of farmland. And of course, it wasn't just them. There were many other pension funds and university endowments doing the same thing. And so the way in which finance and the real world interacts with each other is definitely very complex. It's very novel from case to case. It's going to differ. But what I kind of tried to catalog in my book was that almost always the results are chaotic. When you look at Harvard University going to go and buy farmland in Brazil, they lost on that bet. Even on their own terms, they lost around $1 billion, because guess what? Running farms in Brazil is difficult, and it's very hard to do from offices in Cambridge Cambridge, Massachusetts. And so the original function of the futures markets when they were founded in the 19th century was to provide stability. They were there to give, whether you were a farmer, whether you had pigs, whatever it may be, whether you had, pumping oil, it was there to provide stability, right? It was to guarantee a price for the future so that investors could invest and know they had a buyer when they came to market. And what many people were telling me when I was talking to hedge fund managers and so forth was that many of those real world players have exited the market, right? It's just too volatile, right? The financialization, the AI trading, the momentum traders, it's just gotten too crazy. And those original participants, the people dealing in the real physical commodities that we all need to survive, are now exiting these markets. And as one hedge fund manager in London said to me, what we're left with is programs trading against programs.
Yeah, which is an interesting comment in the context of a price war, right? I mean, there's a fight going on. When you look at the forces of deflation, inflation, that's where I spend a lot of my time in study and in talking to people. I don't see inflation and deflation of periods of time where a currency got stronger or weaker. I really look at it as an arm wrestle, where we have people trying to balance that arm wrestle in European central banks, Fed, Bank of Japan, around the world by, monetary policy, incentivizing inflationary pressures or deflationary pressures. In my mind's eye, and I could be wrong, I feel like the biceps behind these two arm wrestlers are huge right now. They're just massive, and that the forces are so great that it's getting harder and harder to keep an equilibrium. In other words, the slightest breeze on one arm wrestler or the other could send it to deflation or huge inflation. And so I'm curious. I've never lived through a hyperinflation. I've seen them in Venezuela, Argentina, Peru, Russia, the Zimbabwe. I mean, there's dozens of them you can study, but I've never actually lived through one and been on the ground. Any insights on what takes you from inflation to something that's really serious, that's really damaging? Because it doesn't matter how much money you have or what kind of prepper you are, or, how many different hedges you have. No one wants to live in a world of chaos. It's not fun to play defense all the time and have to worry about protecting one's wealth and one's, like Vladimir Putin's in an interesting situation. I can't imagine he's having a lot of fun in his life in the isolation, worried about, defending himself all the time. So any thoughts on what, in your mind, what takes you from an inflation to a hyperinflation, or from a little bit of deflation to a depression? What are some of those triggers?
Well, I went to Venezuela for the book. I have a chapter, I called it, I think, The Fractal Apocalypse, which is really an apocalypse made of prices. And it's a weird apocalypse because unlike other places I had been to, such as Mosul, Iraq, where the city is actually just completely destroyed, very similar to images we're seeing, unfortunately, out of Ukraine right now.
Yeah.
Downtown Caracas seems pretty nice. In fact, it reminded me a lot of when I lived in LA. There's, lots of queues for things. There's street vendors. It all there's sort of big mountains in the background, there's palm trees, there's a bunch of concrete buildings. I kind of felt familiar to me. But hyperinflation is really something you see in the details. So, for example, my translator said, look over there, and pointed to this guy selling lemonade.
Yeah.
So just a regular little kind of white lemonade stand. And the guy's there writing something on little pieces of paper. And I go up and I look closer, and he's writing prices. And he writes, I think it was maybe 60,000 on a piece of paper. And he walks around to the front of his little cart and he sticks it on another price that says 50,000. And then you then look, and it's just the whole, it's like papier-mâché. The 20%. Whole front of it is just price over price over price. And my translator said he does that all day, right? All day, this guy selling lemonade is updating the prices because he knows, and I guess this is what literally inflation expectations mean, right? When people say inflation expectations get out of control, it means that people on the ground, like this guy selling lemonade, knows that by the afternoon his prices have to double,
it's not a fun way to live, I would imagine. But on the other side of that, if you're a person that has some debt, you're rejoicing. You're like, this is incredible because the debt is disappearing, right? In relativity to your currency. That guy with that lemonade stand, he might raise his price. If someone pays it, though, he's got a lot more money to pay off debt that's fixed. His bank is not increasing his debt at the same rate as increasing his prices. So it's quite a dynamic to think about.
I wouldn't quite see it in exactly that way, because by the time you've gotten to, when I was there, it was at 1,000,000% a year, hyperinflation.
Yeah.
By the time you've got to that point, not only is all debt clearly just disappeared, whatever there once was of it, but all the asset prices are going to collapse as well, right? Because if you've got, say you had an apartment within a mortgage in Caracas, the value of that thing is just absolutely plummeting. So when you may have thought one day, okay, I might sell this, I might retire, I might move out of Caracas to, maybe along the coast, you just can't do that anymore because there's nobody in the world is coming to buy real estate in Caracas. So when you're in these really extreme moments of hyperinflation, the value of everything basically goes to zero, and your only kind of options are work for a kind of corrupt aspect of the inner circle of the government, where you kind of essentially get paid in dollars, or you get paid in a currency that can be converted at a very favorable exchange rate into dollars, or you just flee the country. How you get to be honest, in history, there aren't that many examples. And this gets to your question of how you get from inflation to hyperinflation.
Right.
I was very convinced by the research of Jeffrey Sachs at Columbia University, who I think showed pretty conclusively that Venezuela, when the oil price collapsed in 2014, inflation begins to soar to 1,000%. That's not fun, right? That's no laughing matter. But to be honest, for the history of Venezuela, that's also not unusual. They had that in the early 1990s. As an oil economy, they've had these inflationary episodes in the 70s, early 80s, and now again. What really caused that 1,000,000% inflation was essentially an embargo of US dollars put on by the Trump administration in 2017, where the confidence in your currency just absolutely collapses. And that looks very similar to what's happening to Russia right now. The sanctions package looks fairly similar. I'm obviously not as expert as Jeffrey Sachs. He could tell you, I'm sure he's written about it. But it looks fairly similar, and that is how you tip into that 1,000,000%. And of course, that's very, very scary for the 160 or so million people who live in Russia right now.
Let's talk a little bit about education. That's often the way I'll close the conversation, because that's really I'm an education advocate. I believe in it. And what puzzles me is, people that are going to navigate this stuff. First of all, the situation Russia and Ukraine, they don't really want to mess with the energy, because there's such a dependency, on natural gas from Russia. I mean, Europe wants to be green, and they have a lot of green stuff in their own countries, but they're still dependent on Russia for that stuff. And the problem is they want to hurt Russia, but they're so interconnected that it's hard to hurt Russia without really affecting the economies of Europe, and then that contagion grows into the other parts of the world. So it's a very delicate situation. Does it help people to learn about this, or is education just like, look, it doesn't matter what is happening, you can't stop it from happening? Or if a person reads your book, will they gain insights on how to prepare? I mean, it's one thing to have information. This is really rough. There's another thing to have information that says not only is there a problem, but you do have solutions. Is there solutions for the individual to defend themselves against the sociological price war?
On an individual level, unfortunately not. I don't think there's a kind of a hedging strategy against this until you kind of get into, black swan kind of derivative trading. And I actually do interview some black swan traders for the book, but that obviously requires an incredible level expertise and kind of dexterity with derivatives that I don't think ordinary mortals, myself included, should sort of be going anywhere near. I think what I found in the book, and I went to DPR, the Donetsk People's Republic. I went to hang out with the so-called separatist movement. I went to the trenches and so forth. What is missing from the coverage right now is the fact that in that part of eastern Ukraine and in Crimea, so the two places that Putin essentially kind of snatched off Ukraine in 2014, are enormous deposits of natural gas underneath the ground. And this had been discovered quite a while back in 2007, 2008 or so. They had done these geological surveys and found, trillions of square cubic, whatever it is, underneath the ground. And various different energy companies, Russia included, have been bidding for this. Around 2012, Russia's state oil companies and gas companies were rejected for Western companies. And then in 2013, the energy minister from Ukraine essentially says, look, we've got so much energy buried under the ground that when we start pumping this out, we will, which by the way, they thought they'd start doing by 2020, we will not only be independent from Russia in terms of gas, we will also be a net exporter. So it'll actually be competing with Russia to supply Germany, Italy, and the rest of the European Union. And to me, it was no coincidence that mere months after that announcement, you begin to see the protests and the counter-protest movements and various attempted coups and shenanigans in Kiev, followed by a war. And then what is the result of that war? Those two regions that would have made Ukraine a competitor to Russia suddenly disappear.
When people say, why in the world would Japan awaken the sleeping giant and bomb Pearl Harbor? Well, it comes down to oil. It really does, and it's a great reminder that we're still animals, I guess. So there's a very primal nature to competition among human beings. It is a fascinating thing. What do you see the future holding for commodities? Do you think Russia exports a lot of wheat? And so if people say, I'm not going to buy your wheat, that's going to send wheat prices are through the roof right now. Is this temporary? Do we see in the future that, if people that are looking to buy wheat, a year from now are, promising to pay a lot less than what they have to pay today? And so where do you see this? Do you see this escalating, or do you see this getting back to normal?
I think we don't have any clear idea of the time horizon. I think that even if it is short, and by short we mean, 3 to 6 months of being a historic price spike, which is sort of what we're looking at least given how the supply chains coming out of Russia and especially Ukraine have been severed. We're looking at a massive tsunami of hunger and poverty that's striking the world already. And this is going to have massive destabilizing consequences. This is what we should be really, really, really worried about. My book is a timeline from 2010 to 2020. Yeah. It begins with the Arab Spring and the doubling of wheat prices in 2010, off the backs of, by the way, fears of a Russian wildfires damaging the global supply of wheat. That, by the way, didn't actually dent global wheat supplies that much. The Americans had a bumper crop that year, but the speculative fears of it, they essentially priced in a shock, and that turned into a real political shock. You then had, of course, revolutions in Tunisia, Egypt, Yemen, Syria. Those in Libya and Syria descended pretty quickly into civil wars. In Yemen, it grew into a sort of expanded civil war with the Saudi intervention in 2014. From that, you then had the global refugee crisis in 2015, 2016, where millions of people fled the Middle East to Europe. That then destabilized the European liberal project. You saw the rise of right-wing populist movements in response to that. So, this really is a cascade of crises. And that was just one temporary price shock. Just as a remind listeners, what we may be in for is multiple price shocks across multiple commodities over the next coming years. Now, after the shock, you do see some attempts at stabilization, right? So certain stores of food can be released, especially from the United States that has enormous stockpiles. Governments can kind of get their act together, but the short term really does matter, because as we saw with the Arab Spring, you just need, if you like, one grain of sand to spark an avalanche.
Yeah, well, especially particularly with food. I mean, clothing, housing, those are long-term things, but a person's going to get hungry after a couple of days, and so there's a lot of time. My feeling towards, I think education can help. I don't know that a person has to be an expert, Blackstone derivative trader. If a person has a good amount of cash and a good amount of gold and a good amount of debt, and I think the perfect balance sheet to prepare for this type of thing is someone like Warren Buffett, because he has so many assets that benefit from deflation and so many assets that'll benefit from inflation, that he truly has a balance sheet that has a inner balance within it, where he'll be stable. I really believe in the idea of in stocks, and there's times to delta hedge, there's times to understand, but it does take I'll confess, it's not something a person's going to learn in an afternoon. It's much like playing the piano. It's a half hour a day for a lot of years, and then you become accomplished, not because you're a genius, because you put in the work. So part of that can be reading, part of that work for you can be reading Price Wars, How Commodities Markets Made Our Chaotic World. I think it's a wonderful reminder, whether you agree with Rupert or not, it's a wonderful reminder that the reality is the interconnectivity and the domino effect that exists, and the butterfly effect, so to speak, of a price change really can bring some chaotic problems. So, any final words for the listener? As they say, "Hey, I think I might check this book out." What would they take away from that? What would their benefit be? What would they glean from reading what you've researched?
I think if you'd asked me 3 weeks ago, I would have said it's an amazing map into why the 2010s was so tumultuous and felt so chaotic. Now, 2 weeks later, I'd say it's actually a roadmap for the future. What we're now seeing in real time, I mean, as I said, this has just happened in 2 weeks. You've seen chaos in the real world in Ukraine, creating chaos in the markets. And as you just mentioned with wheat prices, it's going to create chaos in the real world again. That is precisely what the book traces between 2010 and 2020. It looks at these different price shocks, and it looks at eruptions of chaos in the real world and how these two things bounce between one another. I would have liked to have been a history that would have, gathered dust in a library somewhere as a kind of fable of a weird time unfortunately many of us lived through. Sadly, I think the way in which the commodity markets work and the way in which they're still so integral to political stability, unfortunately, I feel it's going to be a guide for the next 10 years as well.
Well, it's a fascinating conversation. And again, I thank you for spending time to give your insight. It's wonderful to be with someone who researched, traveled, got his feet on the ground, and not just the academic ascent, but the actual getting out, talking to people. And I thought one of the great parts of the interview was the story of the lemonade stand, because that's just real world stuff. So it's just wonderful. And I thank you so much. This is Andy Tanner. You've been listening to the Cash Flow Academy podcast, where we do our very best to make investing simple. We'll see you next time.
You've been listening to the Cash Flow Academy podcast with Andy Tanner. For more information on investing made easy, go to thecashflowacademy.com.